Gold's price maintained its sideways motion over the past week. In today's report, we intend to lay out the main fundamental challenges ahead for the precious metal, including the negative correlation of the dollar with gold's price, as well as the release of the U.S. employment report for August on Friday that could also have an effect on gold's price. We also highlight two issues that could create safe haven flows for the gold, and finally we will be concluding this report with a technical analysis of gold's daily chart. The negative correlation of the dollar with gold's price seems to have been inactivated in the past week. It's characteristic that the dollar was on the rise over the past week against its counterparts, yet gold's price did not fall. It's characteristic that the dollar continued to weaken in the past week substantially, yet stabilized somewhat during Monday and today's Asian session. It should be also noted that gold's price failed to drop even as U.S. bonds yields were on the rise over the past week. For the time being, we see the interruption of the negative correlation between gold and bonds to be maintained for now. At the same time, though, we note that the negative correlation may resurface should we see intense market reaction on the dollar. We highlight on Friday the release of the U.S. employment report for August, which is expected to have ripple effects beyond the FX market, also on U.S. stock markets and gold's price. A possible tightening of the U.S. employment market could also allow the Fed to ease its dovish intentions to start cutting rates in the coming months. Should the Fed be encouraged by a tighter U.S. employment market to cut rates to a lesser extent, we may see the market being forced to reposition itself, in turn weighing on the price of gold. On the flip side, should the rates and figures show that July's slack in the U.S. employment market remain or has even widened in August, we may see gold's price getting substantial support. Also on a deeper fundamental level, we note the safe haven nature of the precious metal. One key concern of the market tends to remain the Israeli-Palestinian conflict. It should be noted that the hopes for a possible ceasefire deal between the conflicting parties are weak yet are still present. Should negotiations fail to produce a deal, we may see the precious metal experiencing safe haven inflows as market worries could intensify. We also note the tensions in the Sino-Japanese relationships. China has threatened severe economic retaliation against Japan if Tokyo further restricts sales and servicing of chip-making equipment to Chinese firms, complicating US-led efforts to cut the world's second-largest economy off from advanced technology, as per the Japan's Times. Should the tensions escalate further, we may see investors finding refuge in the precious metal. Under a technical perspective, gold's price stabilized over the past week just below the 2,530 resistance line, which please note is an all-time high. The stabilization of the price action of the precious metal allow for a breaking the upwards trend line, guiding it since the 8th of August, hence we switch our bullish outlook in favor of a sideways motion bias for gold's price. Also, we note that the RSI indicator has been lowering, implying an easing of the bullish sentiment among market participants, yet was not totally raised as the indicator remains above the reading of 50. Also, we note that the upward slope of the 20, 100 and 200 moving averages remains, implying the prospect of a bullish outlook for the precious metals price. Should the bulls regain control over the bullion's price, we may see it breaking the all-time high level marked by the 2,530 resistance line, and we set as the next possible target for the bulls the 2,600 resistance barrier. Should the bears take over, we may see the precious metals price dropping, breaking the 2,450 support line and continue lower to test, if not breach, also the 2,355 support base. Thank you for tuning in to our financial news. From all of us here at IronFX, we wish you a solid trading.